Good evening, everybody. This is Naz, aka the Pup, bringing you this weekend's analysis for the market next week. And let's just dive right into it. So we have the Dow futures. Let me just refresh the page. It is now 9:30 p.m. Getting a little bit of late start today. It was a beautiful weekend this weekend. Spent some time with family. Finally got out of the house. Escaped the corona. And yeah, so now we got some futures down 300 points. So let's see how we open up tomorrow morning. Everybody's familiar with this chart. You know, it's the psychology of the market cycle. And as traders, we can get caught up with the day-to-day price movements, but we tend to lose sight of the bigger picture. So, this is just something we want to keep in mind. It's a timely reminder that no matter how long the cycle may take to play out, it always plays out the same way. So where are we in this current cycle? It's very potential that we were at euphoria pre-corona. Corona brought us down, and now we've had a little bit of a complacency recovery. So I think we need to be really cautious here. Try to go into day with no bias and take it day by day. So, what's going on? We have this massive liquidity coming in from the Fed. It's propping the markets up, but yet we have higher unemployment. We have now seemingly not really a second wave, but almost like a resurgence of a first wave coming with higher coronavirus cases in California, in Arizona, in Florida, partially due to maybe opening up a little too early, partially due to the massive protests that have been around the country. So we're going to need another week or two to see this resolve and see if this is just a blip or we're actually getting another resurgence on this first wave. But having said all that, we're having a resurgence of money into the market. Everybody's staying at home. Maybe they're working half-time or part-time, or maybe they're laid off and they're collecting unemployment, and they have nothing but time on their hands. And so what are they doing? They're putting money into the market. What are the gamblers who go to Vegas and to the legalized casinos? What are they doing with their money? What are the sports bettors doing with their money? Right? There's no sports being played right now. And so, there's seemingly a lot of capital coming into the market. And so we just need to sit back and watch and see how that really plays out. We did have a little bit of good news. There was the $100 billion convention industry is starting to reopen. So there's a lot of money sitting on the sidelines, a lot of businesses sitting on the sidelines waiting to open up. And so as we see more and more sectors of our economy open up, hopefully that has a positive spin and continues to propel the market higher. But if this opening up also leads to another, resurgence in the first wave or an eventual second wave of coronavirus, well, that could be devastating to the economy. I think that it just remains to be seen, and we need to keep our eyes open and be diligent and go into each day with no bias and have plans ready for up and for down. So let's get into some of the charts. So right here we're looking at SPX. We had a breakout over the 50 moving average over here in April. We hit this uptrend line that formed here. We had a retest of the uptrend line on Thursday, and it broke and closed below the 200 simple moving average. And then on Friday, we tried to get back over this trend line, but we failed to do that. So we need to keep an eye on this. And we also have somewhat of an island reversal for you Bulkowski fans out there. So it's just something that we need to wait to see if this really resolves. If we have Monday, Tuesday, have a bit of a recovery and we can close over this trend line, maybe the trend continues up. But if we fail to break over this trend line and things aren't looking good, we have a bit of a tightening of the simple moving averages here from the 200 to the 100 to the 50, and they're stacked down. So I think things are getting very interesting. Just remember that psychology chart that I showed earlier. Next up is the DJX, which is Dow Jones. Again, island reversal. Thursday and Friday, we retested the 100 simple moving average, which also coincides with the 618 Fibonacci retracement. So somebody's doing fireworks. It's Brooklyn. What are you going to do? So yeah, I mean, I think we need to see if we hold this level. If we hold it, then we can retest the 200 and hope to get over it. But I think that remains to be seen. We're in a little bit of limbo here. We're in a little bit of simple moving average limbo. Next up is IWM, small caps. It's a very similar situation, but this one looking a little less, a little more bad. Just worse. More bad, not good. So we did close on Wednesday underneath the 200 simple moving average. We closed under the 100 on Thursday when that really big drop. And then, we did close over the 100 on Friday, but we failed to break over this 140.98 level. And we did tap this volume shelf that we have here from the previous swing high. So definitely something to watch. If we kind of recover this week, we could see this as a nice launching point to continue to move up. Let's look at VIX, VXX. We've been in a sustained downtrend until Thursday. We launched and closed off the 100 simple moving average through the 50 simple moving average above this downtrend line. And then on Friday, we came back and retested that 50 simple moving average and the top of the trend line. So let's keep an eye on this. We have a lot of volume down here sitting. Could this be a volume shelf to launch higher? Could be. Let's wait and see. TLT, got a little bit of a symmetrical triangle. Stacked EMAs, 50 over the 100 over the 200. And we're sitting on this volume shelf again. The guys over at TrendSpiders, they love their volume shelves, and I'm starting to love them too. These tend to be launching pads. If we wind up breaking out and getting over this 50 simple moving average, that could be a launching pad to go higher. Let's look at some stocks. So we have Square. Square's in an uptrend, rising 20, 50, 100, 200 simple moving averages. We had a wick touch of the 20 simple moving average, which is in green here. If this 20 holds, I think this could propel us back to this $100 level. We've got to watch the 100 psychological, the 125, 1, 2, 3, 6 Fibonacci extension, the 101.17 all-time high. We have a trade plan. I hope you guys have a trade plan too, because I think this could be a runner. Next up is PayPal, the arch nemesis of Square. I kind of like PayPal as well. I feel like they have a bit more growth. They're moving into more international markets than Square is. They're going global. Venmo's outpacing the Square Cash app. And look at how it's running over this 20 simple moving average. We had a little bit of a touch here, somewhat of a touch there, and then we had a touch on Friday. We had that wick come down. So over the 20, and I'm bullish. AMD has been on our radar for a few weeks now. We're making a nice rounded bottom cup with a handle. We can buy over 57.50 or over 60. We do have a little bit of a wedge going on here too, so we need a little time for this to develop, but I feel like, again, volume shelf here over our EMAs, our SMAs and our anchored VWAPs, so I think the setup is coming. We just got to be patient. Next up is NVDA. NVIDIA has been on a very nice run. Look at the 20 simple moving average. We had a touch here, a touch here, a touch here, and now again here. So again, bullish over that. And what do we have? Volume shelf. How many times do I have to say this? If you're not using TrendSpider, it's worth it. You spend, the 30, 40 bucks a month. It will help you. You will recover that money just based on these tools. This volume by price tool that gives you the volume profile here based on the volume to the right of the candle you anchor to. Anchored VWAP is another one that's on this platform. The gap snake, which I'll show you in another chart coming up. I mean, there's so many really cool tools here that can really help you as a chartist and as a trader. Let's go into some stay-at-home plays. We have Peloton. I like Peloton over 50. We're in a nice symmetrical triangle. We have a nice support of anchored VWAP and simple moving average clusters down here. Put that on your watch list over 50. Set your alerts. Next up is CHWY. It's another stay-at-home play. I was reading a report earlier today that was saying that, since people have been home, in particular people who live alone, you're lonely, you haven't had human contact, you're on Zoom all day, working or whatever, and so people are going out and they're adopting dogs, and they're getting puppies from breeders. So that's only gonna make me more bullish on CHWY. Where are you gonna get your pet supplies if you're still on lockdown and your local pet supply store is closed? Well, you're gonna order online, so you're either gonna order from Amazon or from CHWY, and CHWY's gonna have a wider selection because they obviously specialize in pet supplies. So bullish on CHWY over 52.50. For Zoom, another stay-at-home play. Do a lot of Zoom chats, personally and professionally, and we've been holding this 50 simple moving average. That's been a really great spot to buy pullbacks to. The 20 has been running. It's been running above the 20. I feel like we're a little extended up here. I would buy pullbacks to the 20 or the 50 and use the moving average below it as a stop loss, as a loose stop loss. Or you could buy an all-time high breakout. It's a little more risky up here. I don't like these upper wicks, but you have to plan your trades and trade your plans. So next up is TeleDoc. It is the pinnacle telemedicine company in the market. They do have some competition, but nothing anywhere close. We do have a symmetrical triangle. I'm a little concerned about this 20 looking like it wants to cross underneath the 50 simple moving average. But as long as we are still in our triangle here, I would hold off on any trades until either we break to the downside or break to the upside. So keep TeleDoc on your list. Next up is Microsoft. This was the trade of the week last week. I think this chart is actually still actionable. Entry over 185.50. First target would be 200 psychological level. Second target 204, and then 226. Just watch your price levels, and I feel like a broken record, but look at how it's holding the 20 EMA. I'm sorry, the 20 simple moving average. So, yep, put that on your watch list. Adobe, another just stellar performer. I mean, wow. March, it was at 250. Now it's at 400. I mean, bonkers, right? Buy pullbacks to the 20, keep your stop losses underneath, and just let it ride. This company isn't going anywhere. If you're a designer, you're using the Adobe suite. No question about it. We'll make an announcement at the end of this video, but we did do a soft launch on our Discord server. On our server, we provide our members with trade plans, with Fibonacci levels, with pivot points, and price targets and stop losses for all of our trades. And we are a signal service, so we will signal for day trades and for swing trades in our room. We are running a special, and I'll go over that at the end of the video. So if you stay with us, you might get a good deal. So next up is CrowdStrike. It is a cybersecurity company. Think about where we are today. Everything is in the cloud. Cybersecurity is going to be paramount moving forward. I think at 93.12, it's still a steal. It is a little high. You might want to wait for pullbacks. You might not get a pullback, right? I like buying pullbacks to the 20. We do have a little bit of a gap here right above the 20. So if we do pull back here, great opportunity for an entry. Just have to watch over 103.70. I think it's a safer trade to wait for us to resolve over 103.70, wait for a close over, take your entry there, put your stop loss under 100, maybe at like 98.50, and just let it ride. And last but not least, I would do my Twitter family and the people who follow me a disservice if I didn't have a gold stock on here. I personally don't trade commodities or metals, but just given the state of the economy, not only here in the U.S. but globally, the influx of liquidity into the market by the Fed, the constant printing of money, we're more than likely going to see inflation down the road and a flee to store of value. And your store of value historically has been gold. We're also looking at Bitcoin as a store of value. Definitely something to be said about that. It's certainly not for everybody, but the only thing I can say is if you're a wealthy person, when was the last time you walked into a store with a bar of gold or a nugget of gold and paid for anything? All right, I'll leave it there. On gold, I could see a nice risk reward of 3-1 over 164.50, running up to 173.80, which is the 1618 Fibonacci extension. You can use a stop loss under the 50 simple moving average. So that pretty much is my weekend analysis. I really hope that you have enjoyed your time with me. I try and go over a little bit of macro, a little bit of news, and 10 to 15 charts, which is just about what I did today. And just want to thank all of you who have been with me on this journey these last 5 months. For those of you who don't know my story, I have just really accelerated my learning curve in terms of trading. I've been trading for about 8 years now, but seriously about 2 years, and very seriously in the last 5 to 6 months because I've just had the time. I do own a business. I've been an entrepreneur my entire life. And so when the opportunity for me came up, I partnered with a couple of other traders and we started a Discord service. It's really, really exciting time for myself and for our members. Our focus mainly is in education. Obviously, we've seen a huge influx of traders coming into the market, and our goal really is in education. There's a lot of platforms out there that are only signal services, and some of them are really good, some of them are really bad. I can't really speak to any specific ones, but what we're looking at is I wish I had a time machine and I can go back to when I was 20 years old, because I would have died to have a service like this that could teach me an education for a minimal price per month that I can use for the rest of my life. And, think about, high school students graduating, going to college and spending tens, if not hundreds of thousands of dollars on an education that sometimes they're not even using in the real world. Well, what if you can learn how to trade? What if you can learn how to manage your retirement account? What if you can learn how to make an extra few bucks a month or a week or a year, and set yourselves up to live a little more comfortably? And I've been, fortunate in my life to have mentors who have taught me what I learned, what I know today. And, I use that as the basis, as a fundamental knowledge of technical analysis, and I've only built on it and continue to build on it to this day. And so as somebody who's been an entrepreneur his whole life and been an educator and done speaking engagements and talks, I only thought that for me, I have my passions in life, which my business is one of my passions, but outside of that, photography and cooking. I was toying around before coronavirus. I was toying around with doing food photography because I felt like that hit two of my passions. And I was well on my way doing all my research and everything like that. And then coronavirus hit, and this opportunity presented itself to do one of my other passions, which was trading. So here we are, 2 months having the server free. We had 200 people in our room learning, really enjoying. I don't think we had one negative experience. Some of the guys are only trading with a few $100s and they're making $20 a trade or $50 a trade. And, it's not so much about the numbers or even the percentage. It's just the learning aspect of it. So having said that, we just did our soft launch today. It is $25 per month. It'll probably be open for 2 months before we do our full launch in August. We're in the process of building out our educational platform, and we're really excited. We're going to teach everything from charting to support and resistance to TTM squeeze to EMA crossovers. There's 3 of us that are running the service. We have a couple of expert traders that are helping us in terms of identifying things in the market. We have analysts that are on the team that are looking at fundamentals and they're looking at big picture and more macro. So we've got it soup to nuts. We have built it. We are hoping you come. So for $25 a month, it is a really inexpensive way to start building your knowledge in terms of trading, in terms of charting. We actually have 60 members that signed up today. We are going to cap it at 100, and our first 100 members are going to be founders. We're going to cap their membership fees at a particular rate. And then once we launch live, our rates are going to go up. And then from there, who knows? We're going to try and cap our membership at a certain level. We really want to focus on our members in terms of educating them and making sure that their trading journeys are, smooth and just educational and helping them learn. So once again, thank you so much for being with me. Thank you for taking this journey with me. Now it's time for us to go to work. So thank you. See you out there. Check out the links below. Make sure you like this video, please. If you have gotten any information from me that you have benefited from, you've made a few bucks, all I ask in return is just like my videos, like my posts, retweet my tweets, help support me so I can help support you. This is a two-way street. And I'm very big on karma. I try and give as much as I can, as often as I can. And that's all I ask in return is for your support. So thank you very much again. Have a great night and all the best into the markets next week.